Today we'll start off talking about some of the challenges in gathering data for data analytics, and we'll talk about the objective of this seminar, and we'll go and define a three-step process whereby we identify the data we need for our data analytics, locate that data, and then verify that we have the data that we need to complete our audit. And then we'll summarize with some benefits and takeaways. A recent poll that was conducted by Protiviti and published in Accounting Today back in April shows that over 70% of organizations report that the demand for data analytics is increasing. But if you look down to the third and fourth bars, you'll see that identifying where data resides is a challenge for about 60% of organizations, and for a similar number, system constraints are a challenge. This indicates that people are having difficulty finding the data they need to do data analytics and to incorporate those into their audit. Correspondingly, on the last bar, only 20% agree that data quality is excellent or good. So it seems that what's indicated is a process for identifying the right data for data analytics objectives. Similarly, in the recent publication Data Analytics from the IIA Research Foundation, the #1 challenge reported is difficulty obtaining, accessing, and or compiling the data. So clearly obtaining and accessing data is a problem in internal audit today. I have a close friend who manages the fleet of ground equipment for a major airline. You can see in this picture there's one aircraft and lots of ground equipment. He manages all the equipment all the way around the world for this major airline. Disclaimer here, it's not United, it's another airline. But recently, his company stood up a data analytics group, and they sent him an email and said, basically, send me all your data. This guy's database includes 5.5 terabytes just of equipment manuals and 6.5 terabytes of photographs. His response to the data analytics group is, you can't possibly be serious. We don't want to make that mistake. We want to be more focused and more specific in the data we request for our audits so that we don't run into that kind of a problem. So our objective is to define a three-step process for obtaining the right data, the data we need for our audit. And clearly data analytics is considered a best practice today. So this process is really critical to performing the audits that will satisfy our audit committees and senior management. The three-step process we propose is identify, locate, and verify. Now there's a fundamental assumption before we start the rest of this presentation, and that's that your company operates with an effective IT internal control framework consisting of IT general controls and IT application controls, at least for those databases and systems that are the source of the data for your audit. Without IT controls, an auditor can't rely on the data at all. So that's really fundamental to this whole scenario of doing data analytics. We've got to have IT control. Testing of IT controls can be a subject of many other webinars, and it's not the scope of this webinar. So we will assume that the internal control framework for information technology exists and is effective. This is our three-step process to find the right data. We will identify the data, we'll locate the data. Once we know where the data source is and how it's structured, we can request the data. And once we obtain the data for our audit, we want to verify that we got what we expected. Identify the data is step 1, and that derives from the audit objectives, the audit scope, from which we develop data analytics objectives and audit procedures. Our audit objectives specifically define the intended outcomes of our audit. IA Standard 2210 says that objectives must be established for each engagement. So that's a requirement that we have objectives, that they're derived from risk assessment, that they consider errors, fraud, noncompliance, and other exposures, and that they're adequate criteria. At the bottom, there's a couple of examples of broad audit objectives. Determine the operating effectiveness of internal controls for the cash disbursement process. Another might be assess compliance with the accounts payable transaction approval policy. Another required element of our audit planning is the audit scope, and this defines the boundaries of the audit. Typically, this considers the process, the location, and the time frame of the audit. IA Standard 2220 says the established scope must be sufficient to accomplish the objectives of the engagement. To do that, we have to consider relevant systems, records, personnel, and physical properties. So an example might be that we're going to audit the accounts payable process for the San Diego region, and we're going to look at the time frame of 2016. That's an example of audit scope. I'm sure you all do this routinely when you plan your audits. From our audit objectives, we develop data analytic objectives. I think it's apparent that the scope of our data analytics objectives should match the scope of the audit objectives. They also must have a clearly defined purpose. For example, building on the audit objectives we had earlier, we might want to test the population of 2016 AP transactions of the San Diego region for indicators of fraud. Or we might test the same population for compliance with transaction approval thresholds. Or we might test the population of 2016 transactions in San Diego to assure that purchases are from authorized vendors. So these are specific data analytic objectives that can support our audit objectives. To achieve our data analytics objectives, we've got to define procedures. So now we're moving from objectives to work procedures. And we'll select specific data analytic tests. Most software that's out there that's available has quite a few different types of tests and procedures that you can run. And what you'll do is select those that will support those data analytic objectives. So we might, if we're looking at AP transactions, we might want to be looking at invoice payments for duplicates. So one test we might run is a duplicates test. If we're trying to determine if vendors or approved vendors are being used in AP, we might use a join function to join the vendor master file to AP data. We may use summarization to rank our various vendors and determine which ones are the highest risk because we're spending a lot of money with them. We might use something like Benford's law analysis. We might look for anomalous frequency at approval thresholds or other anomalies in the data sequence. But those are examples of specific procedures that we might apply to one or more of the data analytic objectives. And to some degree, the requirements for those tests are going to drive the specific data fields for which we're going to ask information. One other thing to keep in mind as you do this is to remember IPPF Standard 2310. Internal auditors must identify sufficient, reliable, relevant, and useful information to achieve the engagement's objectives. Sufficient means that the data are factual, adequate, and convincing. And reliable means that we're getting the best attainable information using appropriate techniques. Relevant, we want data that is consistent with our audit objectives and will support value-added observations and conclusions that will help the organization improve. And lastly, useful. We want to help the organization meet its goals. So we don't do data analytics just because it's a cool test and we can run it, but we should be focused on driving objectives that are going to help the organization improve. And that brings us to polling question number 1.
Scott, we have somebody that asked a question. What about using data analytics to assist with risk assessment?
That's a good point. Again, the same principle would apply. I would look at the risks I want to assess and formulate specific objectives relative to the risk assessment. And those objectives in turn would drive specific procedures. that's a broad question. I would assume that you would be looking at risk in specific areas and not just data dumping the whole organization.
Okay, we've got about 88% that have voted. We'll leave the poll open for another 30 seconds or so. Get those last minute people signing the poll. Okay, closing the poll in 10 seconds. If you're looking for CPE, you must answer all of the polling questions. If you're joining us on the phone or from a tablet or a mobile device, you may not be able to answer the questions. What you'll have to do is put all of the answers into a single email and send them to us. So the polling question is, what is you or your team's level of proficiency with data analytics? Most are proficient, some are fairly knowledgeable, we have an expert, or we don't have a data analytics tool. So I'm going to go ahead and I am going to close the poll, share the results, and Scott, it looks like 59% said some audit staff are fairly knowledgeable.
And I think that looks pretty good. I think that's what you want, is at least a good base in your audit staff that are comfortable doing data analytics. So those are good results.
We have just a couple of other questions. I'll go ahead and hide that, but we have one here. How do you use data analytics for continuous monitoring?
Okay, that's a good question too. Again, your continuous monitoring should be aligned with audit objectives. I'm going to let's see. I'm rethinking that. That could be I'm not sure that's a management question or an audit question. If you're monitoring a process to ensure, let's say, that a recommendation is effective or that controls are effective, it's going to be the same thing. You're going to have an audit objective that's tied to, and that's going to drive your data analytics. If this is management, once again, anytime management performs monitoring, and monitoring is a management task, management should have specific objectives that they're monitoring for. And similar to the audit objectives, they may say that they're monitoring the hours per unit for a certain production line. So that's going to drive the specific data fields, specific reports and data fields that they're going to request. So once again, I think it's back to the same answer, whether you're talking about audit, risk management, or monitoring. You need to have specific objectives of that activity, which in turn generate data analytics objectives that support those.
Okay, back to you.
Okay. Step 2 is locate the data. And the things we have to consider at this point are the sources of the data, the relationships we have with various parts of the organization, and then we formulate a data request. And in doing that, we need to consider the types of data for which we're asking. Sources of data. There's several different sources, and what we want is we would like our data to be independent of the audited function. Self-service access is one way. At my previous organization, we had Concur for our expense reporting application. It's very easy to develop your own self-service reports and use those for audits of expense reporting. In other cases, you may have to rely on standard reports and queries that have been set up for various functions, and those presumably have been tested under your IT controls. The next step is, if you need a custom query, a custom report, to work with IT or other third parties to develop those so that you get the right data for your audit. As I said before, the audited entity is not a reliable source of data. You want to avoid that as much as possible, and develop information independent of the audited entity. It's important when you're looking for data, have established relationships. And the first question is, who knows where the data are stored? Very often the audited function can help you with that. They can tell you where the data is housed, what systems it's in, that sort of thing. IT is also valuable in that case. They know what databases they maintain, what servers. And so that's where you find out where the basic data at a higher level, where it's stored. I think that when you're establishing relationships, both with audited functions and with IT, I wouldn't rely on email. To the extent possible, talk face-to-face or via conference call or phone call, but converse with people. Sometimes email comes across as a little too short. You get the exact answer, but it provides no opportunity to really discuss the system and what constraints might exist in the system for obtaining data. This is something that you want to do not just during the audit, but I would advise auditors to build those relationships ahead of time. Go have a cup of coffee with the IT people that are database administrators or responsible for other key control functions in IT. Develop relationships with your finance departments and other audited functions so that when you start asking for information, number one, you've got an understanding of how they operate, what data they have, where it's housed, and they understand that you're coming to provide some value-added activity to help them improve their business. In these conversations, seek to understand what data are available, where it's located, how do you access those databases, and what authorizations are required. In some cases, you're going to need a manager's authorization before you can get the data. Presumably, you have an audit charter that gives you the right to seek that data, but very often someone has to sign off on things like personnel data. And also, you need to consider when you request data required security. You may be getting personal identifiable information or medical data or international traffic and arms regulations data. If you do, you're going to have to consider how you're going to protect that when you get it. Once you understand where the data is located, how it's structured, how you access it, you can begin to develop your data request. You consider the computer system that houses the data, consider the available means of transfer, and then you want to describe a report. You want to say, this is the report I want, this is the objective, this is the scope, going to look a lot like your data analytics objectives, and then you want to define the specific fields you expect to see. Now, if there's a standard report and you can get that format from IT, that'll be pretty well established for you. If you're doing a custom report, you're going to have to really think through all the fields that you're going to need them to put into that standard report. So let's talk about the types of data that you might request. One type is character data or text data. Another are dates and times. You may request numeric data, either variables, continuous or discrete variables, or even attribute data, which consists of ordinal rank data or nominal data, nominal being simply arbitrary classifications, good, bad, yes, no, that sort of thing. Character or text data, usually the key consideration on character data is the length. You've got to make sure that you are asking for a sufficient length of the field to capture all the text data. One important thing to consider, if you import numbers as text, they may not be useful for calculations going forward. So if it's a number field, you want to make sure it's imported as a numeric field. We'll talk about those in a little bit. One exception are that your check and invoice numbers, and the question is, do you want those as numbers or text? Very often I've found that it's better to request these sequence numbers as text, because if the numbering system includes leading zeros and you bring it in as numbers, those leading zeros may drop off, and in some cases they may be important. So things, check numbers, invoice numbers, account numbers, those types of fields, you're probably not going to do statistical calculation, that sort of thing. So think about how you want those to come in, as numbers or text. The next category of data is date and time data. And usually, in this case, the key consideration is the format. If you need to understand, and this is where IT can help you out, how does the source report the data? What's the format it's reported in? and then also know what your software can import. Now, most analytics software gives you the capability to import from any format, but you very often have to know what the source data is reporting so that you can apply the appropriate mask so that you see the date and time data correctly. Usually with date and time data, the format you request determines the length of the field, so that's not a big issue. You do have to consider whether you want date only or date and time data. When requesting numeric data, the key consideration is the precision. You don't want to over or under specify the characters following the decimal point. You want to think about the source precision. There's no point in requesting data that's more precise than the source, but also think about what's useful in your data analytics and also what type of data are you requesting. And I have a couple of examples here. Don't do this. You don't want to request profit to 7 decimal places. In most systems, dollar values are only kept to the second decimal place, dollars and cents, that is. So that's probably what you're going to request is 2 decimal places. Another case of over-specifying is if you're looking at something that's discrete, like in this case counts of children, you don't want that to 1, 2, 3, 4 decimal points. You want that to 0. So think about those types of issues and specify in your data request the precision you're looking for. Part of that is also thinking about the type of data. We have variable data, which is usually referred to as quantitative data, and includes interval data, ratio data, and those are true numbers that we can do calculations with. And then you also have attribute data, which is qualitative data, and comes in 2 types, nominal and ordinal. The ordinal is something like red, yellow, green, where it indicates some precedence. Nominal is good, bad, yes, no, pass, fail, those types of things. Sometimes those are represented by numbers, but you need to understand that those aren't really true numbers in the sense of variables, but merely indicators. So we'll talk about that just a little bit more. So there's a hierarchy of numeric data, and this is a hierarchy from the most information to the least information. Variables give you the most information. These are real numbers. They're continuous. All calculations are valid. There's a subset, which are discrete variables. These are the things that only have integer values, such as numbers of children, numbers of sites, those types of things. Most calculations are valid for these, but you need to be careful about things that report decimal points when you're dealing with discrete data. And these data may be reduced to ordinal or nominal, although when you do that, you lose some of the value of the information in the original numbers. The next step down in the hierarchy is ordinal data. This might be your risk assessment data. This can be your impact and your likelihood ratings for a risk assessment. The values represent the ranked order of the data. In other words, if you have a scale from 1 to, let's say 1 to 10, 6 is not necessarily twice 3. 6 is simply higher than 3, and higher than 5, and higher than 4. Calculations based on ordering are valid, but other calculations are not. So calculating an average from an ordinal risk scale is not appropriate. Data, in this case, may be treated as nominal, but not variable. So you can't move ordinal up to the variable level. You can move it down to nominal. Your least valuable data is nominal data. The values are simply arbitrary numbers that represent categories. The only thing you can really calculate with nominal data are frequencies. The data may not be treated as ordinal or variable. This is a sort of a picture of the hierarchy of data, so we can see that basically the project information continuum at the bottom shows that the lowest value data is to the left, the highest value data is to the right. So to the extent possible, you want to move towards the high end when you request numeric data. So you can see here that variable data is higher than attribute data, and then within the variable category, continuous data is preferred over discrete data in most cases. Quantitative continuous data yields the most information. So let's look at an example of a data request. The first thing you want to do is define the report you're looking for. And this again looks a lot like your data analytics objectives. So here we're requesting the AP report from San Diego, and our description is it's an Oracle report of account payable transactions for KPI San Diego from payment dates January 1st, 2016 through 12/31/2016. And I'll say here too that very often when you're dealing with things like payables or receipts, you'll have multiple date fields. You may have the invoice date, you may have the date it was received, the date it was paid. Make sure you specify the date field that defines your scope. In other words, this case we're looking for payments actually made during this period of time, not invoices that were generated during that period of time. It makes a difference in what you receive. So you need to be specific about the date field you want your timing based on. And also we give a due date. We want them to come back. We don't want that open-ended. We want a specific deliverable date. The second part of our data request are specifying the fields. And usually I like to have like a sort of a shorthand for each field, then a description, and then an indication of the data type. And the field name, if you have access to a sample report and you know what the fields are actually called in the database, you can use that here. If not, the next best thing is to make up your own. So when you say, give me the invoice number, we know it's the unique number identifying the invoice and maybe numeric or alphanumeric. Now, in this case, as I told you, very often I find it's better to work with those types of things as characters than as numbers. And so we've requested that as a character field in this case. So first few fields, the unique identifier for the business partner, the name, these are all character fields. Then we ask for some dates. So we've defined the due date. That's the date payment is due to the vendor. And we've said here we prefer MMDDYYYY format. And then we ask for the transaction date, the date the invoice was actually paid. Again, we specify our preferred format, and we indicate over here that that's date type data. Then we have another character field for transaction type. That'll be something payment, credit memo, that sort of thing. And then down at the bottom, a numeric field. We want the amount for this particular payment transaction. That's going to be numeric data, and we want it to 2 decimal places. Again, as we said, monetary values are usually reported to 2 decimal places in most databases. And now we arrive at polling question number 2.
And that polling question is up now. To what extent does your management support the use of data analytics? Highly supportive, somewhat supportive, allows me to perform data analytics but does not encourage. Management doesn't see the value. So please record your answer. Scott, we have a number of questions coming in. Can you see the questions in the control panel, Scott?
I can see them. I bet I need to scroll down. Let's see. Are we live? You said
you can pick out questions that you think you can answer quickly, and I'll just monitor the poll.
Seems to be a lot about the start. All right. Wait a minute. What about? Let's see here.
Go down to the bottom and start from there.
All right. I've seen that one. Okay. That's a good suggestion. Okay. So one of our challenges is getting management buy-in when requesting data. I'd rather have direct access to data tables versus reports built to the specifications we set, especially given that IA does not own the data. Example is if we specify data time frame and there's a transaction that has a keying area, the report obtained will exclude that record when it would have been caught with visibility to all data. We could miss something. What are some tips and strategies for getting management buy-in for direct data access? Direct data access can be a challenge because you want to minimize, this kind of gets into the IT control, you want to minimize the number of people that can go in and actually edit the database. You can do great harm there, and you certainly don't want to be that person. You would not want write access in any circumstance to the data. If you could get read access and actually see the parent data, that may be helpful if you have a data table or some other document that helps you interpret that data. Again, I think you need to be sensitive to management's desire to provide controls around that data and work with them to minimize, assure them that the risk is minimized. Again, that's why it's good to be able to work with IT independent of the audited function so that you can get the data you need without necessarily going directly to the database. Yes, there's a risk that you might miss an important piece of data when you do that.
Okay. You could take a look at those, Scott. I'm going to leave the poll open for about another 10 seconds, and then we'll close it down. So if you haven't voted yet, please vote. We've got 89% have voted. If you are looking for CPE today, you must answer all of the polling questions. So we will go ahead and close the poll now.
Okay.
Results. And it looks like the majority said highly supportive. Very good.
That's really good. I think that shows that management, senior managers particularly, and boards in the meetings that they go to are hearing more and more about the value of data analytics and insisting that they see that from their organizations. I like that trend because I think a few years ago it would have been a bit different.
And that's a perfect tie-in to the last question that I see posted there. How does internal audit sell the use of data analytics to operational management?
I think that thinking of my own experience, one of the ways to do that is demonstrate the value, and this may require doing maybe an advisory project or a consulting project separate from your audit just to show them the value. And in our case, we had an issue where there was inconsistencies in the hours being reported by manufacturing, and we were actually able to use data analytics to go in and identify where the anomalies were occurring, where in the process the anomalies were occurring, and providing that data to production management. Production management then went in and actually changed their processes so it became more robust and that hours were recorded in the right categories as it went through the manufacturing process. Another thing we did for them is an important control we had was supervisory approval of time, and that was inconsistent. We developed reports that showed management where the gaps were in getting approval of timekeeping, and that allowed them again to develop their own controls for monitoring approval. They actually eventually developed an email notification that when somebody didn't improve time by the deadline, emails went out to management so that they could follow up and ensure that that took place. So I think it comes from understanding what their problems are and showing them that there's a solution that data analytics can provide to their problem. And again, that's sort of part of establishing relationships before you actually start your audit. I saw one more question here. Someone asked, what is HIPAA and ITAR? And I guess I went over that pretty quickly. HIPAA is the law that basically protects healthcare data. All your medical records cannot be released to unauthorized persons under the HIPAA Act. And so if you get into medical data, you're going to have to provide sufficient protection for that. People are going to be very reluctant to share that data because of that law. ITAR is the International Trafficking in Arms Regulations. This prohibits you from providing information on defense products or defense services to foreign entities. Once again, if depending on the nature of your organization, if you have data that has ITAR implications, you've got to protect that so that if you have foreign employees or maybe a foreign location, that they can't access that data, and because that would be a violation of the ITAR. So those are my answers there. We'll move on to the next slide. Step 3 is verified data integrity. So we've identified our data source. We've identified what data we specifically want from that data source. We've communicated that, and now the data are going to be transferred from the data source to us. And once we have the data, we want to verify that it's complete and that it's reliable. When you transfer the data, one of the things you want to do is minimize the intermediary handling. And this is where I'm really sympathetic to the person who asked the question about going direct to the data source. Yes, if you can access the data source directly without any threat to the underlying data, that's probably the best situation of all. That's going to guarantee that you're getting exactly the data you think. So you might want an ODBC connection. Perhaps IT can set up a file transfer protocol and pull the data, put it in a separate file that you can access, possibly on a shared drive, possibly in SharePoint. In some cases, you may have to rely on a print report or PDF. I was testing some accounts aging, and actually the only report I could get out of this old system was basically a print report. And data analytics, some of the data analytics software, such as IDEA, and I believe ACL will do this too, can actually read a print report in PDF format and turn it into a database, which is really handy if the data you need happens to reside in a report in that format. Down at the bottom of the list, we've got email. Don't recommend that very often. If you're doing data analytics, your files are going to be too large to go through email. Plus, the security just isn't there. You always have a risk that the data is going to be released to somebody that's unauthorized when it's moving through email. And last of all, portable media. And I'm thinking here of USB sticks. I would say don't ask for that. Most companies, I hope today, are fairly reluctant to use USB sticks because of the possibility of importing malware over USB. I'll tell you a little story that was told to me recently. A company, they actually wanted to test this to see if people would insert USB sticks into company hardware, and their cybersecurity consultants went out and actually dropped a few USB sticks around the parking lot. And they found that the most likely people to insert the stick into company hardware were their external auditors, so not a good thing. Anyway, I would stay away from portable media. That's only going to scare people. All right, again, consider security requirements. We've talked about HIPAA, we've talked about ITAR, we've talked about personal identifiable information. If you have that, you have to control the access to that information, limit that access, and in some cases you may want to consider encryption of the data. To make it even harder to access. So having received your data, the first thing you want to do is check for completeness of data and then to verify its reliability. Completeness usually is pretty simple, is to compare the record counts between the data you've received to the source. If you've got the same number of records, it's pretty reasonable to conclude that you've got all the data that you requested. The reliability is perhaps a little bit trickier. One of my favorite tools is the control total. You want to run control totals on your key numeric fields, your numeric fields that are important to your audit. Run control totals on each one of those and then compare those back to the control totals for the same fields in your source data. One of the things to watch for is when you import numeric data is for blanks reported as errors. Usually you can turn on there's a switch somewhere that you can say report blanks as zeros. I've found that improves the quality of your data in your numeric fields when you use that convention. Another thing you might want to do is run summarizations and evaluate reasonableness. Let's say you're doing some test of revenue recognition, and you know that 60% of your revenue comes from Site 1 and 30% from Site 2. Take your revenue and run a summary that way, and look and see, is that what you get? Are the numbers correct? If Site 1 is reporting 80% of the revenue, chances are pretty good there's something wrong with your data. Either you didn't get all of it, or there's some kind of error in the data. So you can run some summaries and just compare them to what you already know about that particular process. Another thing to check is first and last dates. If you're requesting invoices, you're requesting checks, let's say for 2016, and the first check turns up on April 15th, 2016, probably you're missing something. So that's another good check. And another thing you can do is check, speaking of checks and invoices, you can check for gaps and duplicates. One thing I've seen is Concur Concur can report multiple records for one expense report. You think you're downloading just a basic listing of the key header data for all your expense reports. It can actually report multiple records, and that happens when different people in the process add comments. Every time there's a comment, it will duplicate that record, and you're going to have to go and clean that data up before you can use it. But if you run a duplicates check, you can find that pretty quickly. Another thing you can do is compare to print reports. Once again, when I was doing the AP aging test that I mentioned a while back, one of the things I did is once I had the data into my database, I went back and simulated that aging report and then compared key values back to the print report just to make sure that I had captured the data accurately in that import. So here's an example. Here's a fairly simple example of verifying data integrity. The top half of the panel is a screenshot from Caseware IDEA, and the shot below is Excel, which should be familiar to everybody. So if you follow the purple arrow, you can see up here in the blue bar at the bottom of the IDEA panel that we have 992 records, and we track that down to the numerical count of 992 records. Now notice to the left of that, it shows a count of 993. The reason is that the header row in Excel counts as a record, and obviously it's not really a record. Doing the count based on the numerical field helps you avoid that. The other thing you can do is just do a raw count and subtract 1, but be aware of that little anomaly in Excel. The other thing is your control totals. Now again, IDEA will display a control total for any field you select. In this case, we've selected the field amount, and we have a control total of $34,821,002.29. And following the red arrow down, we can see that our sum of that field in the Excel spreadsheet is exactly the same. So at this point, for the purpose of this audit, we can reach a reasonable conclusion that our data are complete and they're reliable. And now we can move ahead with our audit procedures. So now we've arrived at polling question number 3.
And that polling question is, what is the most frequent source of data? Self-service access, standard reports and queries, IT or other third parties, or the audited entity? Okay, Scott, are you able to see the polling question, Scott?
Yes, I've got it.
Okay. All right. You might want to go through and see if there's any other questions that...
Good suggestion. Okay. Okay.
Disregard,
right here.
Disregard the questions on internet, on sound or muting. Something.
Yes, I've got one here. I got someone made the statement that encrypted USB drives should be fine. I certainly agree. There's less risk there. I think there still could be some risk that there's some malware buried in a hidden spot on the disk that you can't see, even if your data are all encrypted. It probably depends on exactly how your organization handles the encryption of USB drives. I'd want to be really sure that that's safe, and that probably involves a conversation over coffee with your friends in the CISO office.
And if you're working in a secure facility, I doubt whether you'd be able to bring any USB drive in, whether encrypted or not.
Right. Okay, that seems to be all we have for this section.
Okay, we did have some earlier questions. One was, what data analytics system can be affordable for a medium-sized company?
What for a medium-sized company? I think that there's a number of tools out there that, in my opinion, fairly reasonable. IDEA comes immediately to mind. Caseware is our sponsor. I'm not sure what the current licensing arrangements are, so I'm not going to quote dollars, but usually if you go seat by seat, they're not terribly expensive. ACL, I think, has similar pricing. Tableau might be a little bit more pricey if you use that. And again, to some degree, you need to do an assessment of your data analytics needs in order to determine what's the best solution. The advantages of using dedicated audit software is that most of the good audit software is going to give you a complete audit trail. It also incorporates the preservation of data. In other words, it doesn't destroy data. Those are two really attractive features that you don't get, let's say, in Excel. The problem with Excel is what you see is, unless you go to a lot of work to save multiple spreadsheets, all you see is the final result, and you've got no way to track back to how you got there. A good audit software, if you are looking at a result, you should be able to pull up a history that shows everything, every step that went into that conclusion or result from the time it was imported until what's on your screen. So those are things that something I would look for. Same thing, preservation of data. You don't want to lose your data when you're doing calculations. You want to be able to show what your source data looked like in case you have to go back and verify it was complete and reliable. So again, these things lean you towards the audit-oriented solutions. Okay.
I'm going to go ahead and close the poll. We've got 91% have voted. While I'm closing the poll, Scott, there is a question here that I think is a follow-on to that. For staff members who are not trained in data analytics, what's the best and most efficient way to get them proficient in data analytics?
Okay, that's a good question. One thing, I know that the IIA has a online course in data analytics. That might be a good place to start. To get sort of a basic understanding. I think that your next best source is your data analytics solution provider. If your company has already selected a particular data analytics solution, they should provide a specific training for that software that will include not only how to do the mechanics of the software, but how to actually use it in practical audit situations. So that's your next best source. If you're starting from scratch, you don't have a solution, something like that, I will say that the University of Texas at Dallas has an online course. It's a regular credit type course in the graduate school on using data analytics that goes through the use of IDEA, ACL, Excel, and Access, and I think touches on one other proprietary piece of software, and that's another resource if you don't have access, let's say, to the training that's provided by one of the vendors.
Yeah, I think that from my experience, starting with an Excel add-in really is an easy way for auditors to get started because everybody uses Excel, so they're familiar with the product. So there are a number of add-ins out there that that an auditor could start using and just become familiar with the terminology associated with data analytics, doing things like extractions, joins, things like that. So I think that that's a good place for inexperienced data analytics person to get started.
To throw out one name on that, Active Data is one that's like that. I think
I didn't want to provide any names. I know of a couple of other products.
I've already mentioned some names, so I thought I'd go on and throw it out there. Yeah. People can look for that.
All right. Well, we've got the polling question up there now. So, what's the most frequent source of data? Looks like standard reports and queries.
Yes, and that's not surprising. That is probably, in my experience, the most frequent go-to place for getting information. If something already exists, it's been tested, it's under IT control, why not use it? Self-service access, certainly that's the most independent way, that's good too. And then your sort of last independent resort is working through IT or other third parties to get the data. I see that 19% are getting it from the audited entity. I don't want to pass judgment. There may be situations where the audited entity is the only one that holds the data that you need, and if that's the case, then you're pretty well limited. But I would be hesitant to draw any conclusions just based solely on the audited entity's data unless I have some way to verify it with another source.
Very good. Okay, I'm going to go ahead and hide the results, and you can show your screen again.
Okay. So we've arrived at the benefits and takeaways. Once again, we have a three-step process that we've defined for getting the right data for our audits. And the first is to identify the data that's relevant to your audit objectives. What is the data that's going to support those audit objectives and is going to be useful to the organization for the purpose of adding value and improving? Once we've defined those data analytics objectives and we know which procedures we expect to use, now we can start to locate the data. Again, we want to find sources that are as independent as possible. We want to communicate face-to-face with both the data owners and IT so we can find the best means of access. And then we want to develop specific requests for the data that we need if it's not available already in a standard report. And once again, I would still map out the standard report so I have a roadmap of what data I'm going to get in that standard report. Lastly, once we've requested the data, we've received it from whoever's providing it, we want to verify the integrity. We want to minimize transfer handling. In other words, we want to stay as close to the source as possible. And then once we have our data, we want to make sure that the data is complete, that we have a complete number of records, and that it's reliable, that things like numeric fields total up to control totals that match the source data.